failed signals are some of the best entries that you can find in trading. And in the trade review section, you will find out how to actually identify this kind of the failed signals so that you can just use them every time whenever you are trading. Hi, my name is Ming Jong and welcome to another episode of the market analysis for the S&P 500 E-minis futures for the session of 12th of January. So in this video, I'm going to share with you the market recap from the last session and also a trade review regarding the identifying of the failed signal. And subsequently, I'm going to share with you the trading plan and also the bias together with the key levels for the market. Alright, so let's just get started now. So first of all, let me just get back to the daily time frame and let's just start the analysis from the daily chart. So as you can see in this S&P 500 daily chart, so far it just kind of bumped into this channel overbought there. So in my previous video, I talked about the potential corrections coming. So what we need to identify is some kind of the climatic run-up, which I think we just witnessed that, and also some kind of the channel overbought overthrow, which is kind of reaching there, but although there might be some kind of the final push, and most importantly is some kind of the supply, something like that, or even higher as well, together with very bearish results as shown in this kind of the bearish spread. Anyway, we are not there yet, but I'm keep a closer eye on that as well. Alright, so let me just get down to the hourly time frame and let's see what else can we extract from there. So there is something that catch my eyes. First of all, that is the shortening of the upward thrust together with the channel overbought while we're approaching this. So we can see that there is some kind of the thrust shortening. So that's the upward progress or the upward thrust. So you can see that it's getting shorter and shorter and shorter. And subsequently, it's kind of anticipate a reaction that actually happened during yesterday, the go back session. And during the US session, we see an attempt to rally up, but it's kind of shows some kind of the rejection at about 3,800 right there. So you can see that this axis line somewhere around 3,800 actually acted as a support or resistance depending where the price are. So this resistance, support, resistance, resistance. Currently is testing the axis line at 3,800 again. So you can see that it's kind of working at this level. And another thing is this Dow trend line in this H1 time frame. You can see that it's kind of rejected once, second, and currently is still testing at this Dow trend line. So I think it's kind of in a vulnerable position because it's just entering into the shortening of the thrust, suggested the up momentum is fading, and that actually coincide with the channel overbought right there, and also it's kind of showing a lack of the demand to have another push up. But I will just elaborate a bit more for the current market condition in the later part of the video. So now I just would like to jump into the trading time frame for a trade review, which I'm going to elaborate a bit more on how to actually identify a failed signal as a trading entry, because failed signal is some kind of the best kind of the trade entry that you can find in trading. Alright, so here we go. As usual, let me give you a bit of the context before I jump straight into the trading setup. So we can see that just the previous session, during the previous session right there, we can see that's the active volume, and we have this kind of the ramping up, touching kind of the all-time high level, sets up the resistance right there, 38.20, 22, and during the global period, so that's global period, we have a reaction, and subsequently consolidation. So that doesn't really look any bullish to me. So at that point, my bias is definitely bearish, because the background is we have a downtrend and followed by a consolidation, and eventually just prior to the US Open, we have seen a breakdown. So definitely is on the bearish camp. So my trading plan was actually to short the market. So at the US Open right there, so we have seen this bar there. So this bar actually acted as a test of the support become the resistance, because it actually just break down. So I think this is quite a typical sign of weakness. So this is a backing out action as a back test. Let me just show you again. So this is kind of like a distribution range, and we have a sign of weakness breaking down and just have a backup during the US Open. So I think this is quite a textbook style of the trade entry. The only thing that is that I will need to find a right timing to enter the trade. So right at this point, it's still not that good, because I would like to have two kind of the trade when this kind of the situation happen. So we have a sign of weakness followed by a backup action. So at this point, there's only two kind of the trade. One is the reversal type. So somewhere around there probably can enter a reversal. Otherwise, I'll wait until the breakout happen. So two kind of the trade that I'm looking for. But something that caught my eyes, which is kind of unusual, because while I'm just prone to enter a reversal trade, I couldn't find a great entry, because I just would like to wait for the candle become smaller, so that I can have a better reward to risk ratio to the downside. So at that point, while this kind of the apex formation or the triangle is forming, I decided to wait for a breakout type of a trade to break this previous swing low level. And also I noticed that this is kind of a fight between the bull and bear, while the volume is kind of on a high end, because this is definitely higher than the normal volume, and I just suspect that it will have a breakdown. So once it's just resolved itself out from this triangle pattern, and then eventually just have another breakout of this previous swing low. But I did make a wrong prediction right here. So this bar actually acted as a confirmation of the fail signal, because we have a sign of weakness breaking down followed by a backing up as a test of the previous support now to the resistance, quite a textbook style, right? And eventually forming this kind of the triangle pattern. I just want to wait for some obvious entry, or even wait for this kind of the breakdown. But it did not really go to what I anticipated. In fact, it just break it to the upside with this big bullish bar right there. So this is the fail signal that I referred to, because previously the bias is definitely to the downside. We have a sign of weakness breaking down, back test as a backup action. So now the signal actually failed. So instead of continue to the downside, it actually have a breakout. So now my bias actually is to use this fail signal as my trade entry. So once the breakout happen, I just wait for a pullback as a test. So we can see that this is the breakout. The pullback comes with the decreasing of the supply, and eventually here comes the breakout. So I just anticipate some kind of the continuation pattern to the upside, or at least to test this resistance level. So I just enter long right after the close of this bullish bar, the breakout bar of this. So kind of a flag pattern. but it did not really immediately go to my desired direction. In fact, it's just kind of consolidate further with a decreasing volume, and eventually it just have a breakout and forming some kind of the rejection. We have seen quite a lot of the rejection tail right there. So at this point, I still would like to see some kind of the continuation to the upside. That's why I did not really close my position. So instead, I wait until this failure happen. So instead of some kind of the continuation to the upside, it just have this failure bar right there. So after the close of this bar, I just exited my trade. So overall, instead of taking a full -1R, so that's my stop loss right there, I just exited somewhere around there, probably around -0.3R. So you can see that even if I did not really exit my trade, eventually if I still keep that, I think this shadow would stop me out. But you can probably argue that I could have just have a wider stop loss, then I could probably save the trade and eventually to ride it to the upside somewhere around there until it hit the supply line of the down trend line right there. So I mean, depending how you manage the trade, some people could end up being profitable, maybe exit somewhere around this downtrend line. But if you actively manage a trade, then probably this is what you will end up be to get a stop out right there. And also there's possible some re-entry opportunity, but it did not really happen to me. So overall, I just had a loss, but instead of a -1, I just reduced it to about -0.3. But the point is that I would like to make is this is kind of a fail signal right there. So instead of have this kind of the bearish bias continuation to the downside, so once it's actually show the failure of the signal, so instead of breaking down, it actually break up. So this is quite a good entry. So this sort of the fail signal is some of the best kind of the signals in trading. Alright, so that's my trade review, and let me just get back to the hourly time frame and let's talk about the current market condition, current market outlook. So far, I think we just talked about the channel overbought right there and also shortening of the upward thrust. So we have this kind of the upward thrust is getting shorter and shorter, suggested that the up momentum is fading. However, we did not really see a great deal of the supply, at least not yet at the moment. But I just suspect that if the price can have another push up, then it probably will just break above this previous day high, and then it will just challenge the previous swing high level or time high at 38.20, probably enter in this channel overbought again, maybe 38.30 to 38.50, and until then we'll just anticipate another kind of the reaction. So for this kind of the bearish case to have the continuation to the downside, definitely I will want to see a break below the support level. So this axis line, so you can see that this is a resistance. Once it's breakout, it turns support. So this is quite an important line, 37.75. If it just broke below, then definitely I think we'll just go to test somewhere around 37.20 or 25. So if you just zoom out a bit and look at the previous chart, you'll probably notice that this is also another axis line where we have this kind of the resistance, turn support, kind of resistance again. So axis line is quite a useful line where you will see a lot of the price interaction at the axis line. So just pay attention to that. And also notice that 37.20 not only is the axis line, but also coincide with this up channel. So that's the demand line right there. So this is quite a defense line. So definitely watch out for some kind of the bounce from there. In terms of the trading plan, let me zoom in a little bit right there. Let me just quickly draw up the previous day high and day low that will form my battleground. So you can see that this is the previous day low and day high, and subsequently the clawbacks high and low somewhere around there. So that's the high again. So it's kind of contracting at the moment. So we see that this is the high, and also that's the day low. And if we have this kind of the breakout, break above the previous day high right there, then definitely it will just challenge the previous swing high level. Otherwise, just watch out for some kind of the bounce or break at the support level near the previous day low at 37.75 or 37.80. So just watch out for whether it has some kind of the reversal type of a signal or just a breakout, and then to trade accordingly. So that's my view. And overall for the long-term chart, I think we are just still at a vulnerable position, because it's kind of a bit stretched at the moment. We have seen the shortening of the upward thrust, suggests that the up momentum is fading. So we have entering into the channel overbought right there. So that's the channel overbought. So now we just would like to see some kind of the increase of the supply should a correction is coming. So that's what I actually anticipate for. All right. So just tighten my stop loss for the swing trade positions, and just watch out if there's any short opportunities. This is the end of the video. Hope you enjoyed it. So if you'd like to learn more on how to increase your winning rate, definitely check out the video that showed up on the screen right now, and to subscribe my YouTube channel and to get my weekly stock watch list update for free. The link is in the description below. Thanks for watching. I will talk to you soon.